Hi folks, Nick here, recapping April Fool's Day, first day in the quarter too. A potentially hideous day turned out to be, bad day, but for a bad day, it wasn't so bad, except it felt really bad, but it didn't turn out so bad. Confusing, I know, but markets are confused. I'll show you a couple examples today. It's incredible. First of all, before the open, you saw in the pre-open note, we had negative overnight action, and then it completely disappeared just before the open, and then it dipped right back down. See, this is late last night, and then I woke up to, whoa, almost green markets, if in fact it was green, and then we opened, revisited the lows, and then CNBC folks are like confused. What's going on? What's going on? It's like their monitors don't recognize red. Hey, red happens. What's going on? Markets are selling. That's what's going on. It's like they're confused. So we have had, this is the S&P, we have had lower highs, lower highs, lower highs, and they needed to break out of it today. And last minute miracle buying came in out of somewhere to save the day right there. Right, this candle right here coincides with the strong Apple, just strong ramp from Apple, which averted disaster, by the way. This is Apple. It would have gone back to this low had it lost that level emphatically, but it didn't. NASDAQ, same deal, the rip into the close out of nowhere. In fact, the small caps closed green. IWM was a little green, RUT was a little red, and here's the joke of the day. The VIX closed down 1%. It was green all day, up 5-6%, and here's how I interpret it, okay? Negative sell all day, nervousness, everybody's worried, and then when the market closes, oh, no worries, because the VIX is really red, because the VIX is the measuring nervousness, so to speak, right? It's the gauge for volatility, so it kind of measures the nervousness in the market. There's no nervousness, there's negative nervousness. They're so relaxed going into the weekend. They are being the bulls. So I'm not sure why. I'm going to start with the range today. I'm going to break form. And I'm going to show you the SPY. I sent out a note already. This is a long-standing print as far as trend is concerned, and no one's concerned we're kissing it so often, so close together. Okay, today we kissed it too. Losing this is problematic. Also, I shared with you the head and shoulder-ish pattern that we have, which could bring us down to here. That's one. Volume, heavier than yesterday, so it's legit. How about the Qs? That's the NASDAQ. Well, nobody's worried that we're kissing this level. We broke this level, actually, and this is the same bounce area as this candle right here, so that's good. That's two candles bounced here, almost the same bounce as here. This is the level from which we broke out, which was previous resistance. So sometimes prior resistance turns into support, turns into support, turns into support. But you see what's going on? Big bounce, smaller bounce. Why the smaller bounce? Are they getting tired? It's head and shoulder-ish also. It's not technically head and shoulder because of this being equal to that, maybe a little bit higher, a little bit lower. I can't see from here. But I use a crayon. I don't use a fine tip of 0.5 millimeter. So if this breaks, this can come pretty quickly. That's why I did it in yellow. Volume bigger than yesterday. How about the IWM? Small caps have been holding out best. Look at this bullish candle. Yes, that is a bullish candle. Why? Look at where it was. And they closed higher than where they opened. That is bullish on high volume. So the markets tried to sell it and emphatically rejected it. What's bearish about it? Can you tell me? Out of time. Lower highs. So if tomorrow they go to 125 or break out of the lower high, believe me, they can run to 126 pretty quickly. Okay, what's bullish about it? Other than the fact of what I just said, it's higher lows. So now we have a trend going on, and I know I've got a lot of trends going on, but believe me, every line counts. Every line. If you lose track, I'll keep you straight. So now this one comes into the forefront here, and I can see this one also here. I'll change it yellow just because it looks kind of cool, and make it a little heavier. I made it a lot heavier. And this yellow line, this one should be yellow too, but I won't do it now. So now we have range tightening, and it needs to decide, break out of 125 and reach for that yellow line, or come back and revisit this yellow line, and if you lose it, you come back down to here. This is still close to the all-time high. These are all-time highs, okay? So they're still holding out good. Those are small caps on good volume. All right, we had some other stuff go on today that was, you know, I told you the pretty embarrassing thing about CNBC's. Oh, what's going on? What's going on? It's like, what? Red happens. That's what's going on. Red. All right, so they also had an interview, CNBC, with Primerica or some company. The CEO just represents what's been bullish recently. Fengineering, you've heard me say that. I made up that term, financial engineering, Fengineering. He comes out and said, what's your game plan? He actually answered, my game plan is, those are quotes, and then the other part of the quote is buying back stock. What? They pay you, Mr. CEO? He wasn't Mr. Gobs of money, I'm assuming, 6 figures, in order to come up with this as a game plan? How about growing your business? How about new ventures? How about this? How about that? Best you can find is invest in your own company. All right, so how much financial engineering is built into current stock prices? I have a formula that can calculate that, but it takes a lot of time. I did it one time, and it was a lot. So that's a potential downside vacuum, because stop that. That's a vacuum, goes away, and it just creates the drop being a little more severe because a plus went away. So now the minus has got a vacuum. So if the prices drop for drop line purposes, if you add to it the disappearance of artificial jacking of the prices, then you get a leverage effect, so to speak. All right, so enough picking on the what's going on with as far as CNBC is concerned. But it represents the current markets, how confused they are. Okay, so again today, I think they averted disaster. By disaster, I mean just a 1% drop, like it was in the pre-open. All right, so there are a few names I'd like to talk about. As far as the Iran deal, there was no deal, and I told you if there was no deal, oil will rip, and it did, up 5%. It closed under 50 again, kissed 50, and there it is in the middle, and you can see it. I'll zoom out to 5 minutes so you can see the whole day, and you can see, oh, scary, maybe there'll be deal. No deal, the talks broke apart. Up. One report says that our representative is still there, Kerry, I think, and the other report said no, everybody left, so I'm not sure. So there's probably no deal there, or at least no deal this week. Zooming out to 1 hour, you can see that we've been there before we chase oil. Let's not chase it. This is an important level, apparently. I drew a line on it. Regardless, so it's still a coin flip. Don't know where it's going. Don't care. I don't trade it. As far as potential names, variables, I should say, the variables are still the same. Political, we know all about it. Economy, we've got reports coming and going, so it steps to the forefront because of Friday. We have an economic report that's pretty important for the U.S. Jobs, unemployment, employment, I should say, yeah, unemployment. However, we can't trade it. So tomorrow makes tomorrow interesting. Will we sell going into the weekend because people don't want to be long? Will we buy going into the weekend because people don't want to get caught short over the weekend because there's a chance that the Greece deal would be done? I don't know. All I know is one thing. People are so confused, and I really don't understand. All I know is one thing. How many write-ups have I done in the morning for you? Every time I tell you, there's no confusion. The markets are priced to have a 2050 magnet. They closed at 2059 today, SPX. And I've said anything under 2050 is support, so any dips should be bought unless you have a giant headline that would break everything apart. That can happen on any day, so it's nothing unusual. And 2100 is resistance, so don't go chasing once it goes 2100 unless there are signs that it's going there. 2050 to 2075, 2080 SPX is a wishy-washy situation where it can run up to it, but it should be somewhat resistive on the way out, somewhat supportive on your way down. So 2050 is a magnet, meaning if prices are falling, it should help to slow down the fall. If prices are rising, it should act as a magnet to stop them from rising too much past it. Hence 2059. So there's no confusion. Next week is set up exactly the same. So if I have a long portfolio, I would sell some credit call spreads. If I have a short portfolio, meaning I have more short positions than longs, I will sell some credit put spreads, and I sent you a couple ideas on that. That's how I trade it. There's no confusion. I'm not making this stuff up. I'm just looking into what's open and how I'm trading around it. All right, oil, we don't know. Euro today, I think, was a little strong. Gold was strong today. Bonds were surprisingly strong, and rates were surprisingly weak. The 10-year is under 1.9% now, and the bonds are up 1.3%. The ranges, I just covered that to death. We do have a few tickers. I think I need to look at one that Laurel brought it to my attention today, which I'm glad she did. The IYT, this is the transports, one of the transport trackers. This is a 1 year. Let me zoom out to 2 years. This is a 2 year. This is a pretty nice trend, right? This is the October correction. It kind of mirrors the market, right? If markets are running, you know, the transport should run. And people say, you got to believe in the transports. Well, look, what's different in this? Look at it. What's different? Rise, right? Channel rising, channel rising, channel rising, dip, channel rising, sideways. You see how I can draw a line on top of this? Yeah, and I can draw another line here. So it went from up to sideways. What's next? Look where they connect. Right here. Right as of today, we kissed the bottom end of the line. So lose that. What are the chances we're going to get to here? We're going to get close to it. Bounce off of it, there's a chance we get up to here again. So are we going to trade this and how long? Okay. Now this is a 2-year trend, so keep that in perspective. So this could be like 6 months or something. What is, yeah, October to April. Okay. So keep that in mind. So it's not going to happen tomorrow, but this is a level to, it's too important to ignore. It's crossroads. It's inflection point. And if oil did indeed bottom, that's not good for people who use oil transports. I don't know how correlated they are. I've never looked at it, but it's something to look after. Also, the only reason I say this is because the RUT, I believe, had a similar trend. Up, up, up. If you look at 2012, it's straight up like this and then straight out. And now it went back up. So it is a possibility that it ping-pongs, like the RUT did, ping-pongs here and breaks right back up and continues this upward trend. It is possible. But if I have a lot of longs, I need to buy some protection. And what's wrong with spending some money on protection? That's all I'm saying. I'm not forecasting a downside. I'm saying it is a likely scenario, just as likely as going up. Therefore, we need to pay attention. Okay. All right, that's one stock. Also, Starbucks today was down big in the morning. I'm not sure where it ended up on the day, so let's visit it. Yep, still down big. Let me zoom back in. So it had had a run-up. 401, I said, broke the yellow line today. That's the yellow line. I said it's trading this recently, right? The ascending, broadening wedge. And this is like an inside channel. It had been trading nicely, and boom, today's candle breaks it. So is it going to try to get down here, and how close to it? That's the question. So if I'm long, I would cash in some chips. If I'm looking to go long, I don't want to catch this falling knife. This is on heavy volume. Don't know exactly why it fell. I didn't look into it. But if you trade it, you probably know more about it. Facebook had an ugly day in the making. It did break the yellow line just like Starbucks did. So I thought it would come down to this end, closer to this end. I am holding puts, lotto style. That's a lot of red candles. And let's see what it does. It is quite a bit lower than it's just a few days ago. And I don't like the way it's trading. That's why I'm still holding my puts in Facebook. Somebody also asked me about Oxy. So Oxy, let's go check it out. Did I hit go? I did not hit go. Boom. They said that they're looking to catch it. Okay, so it bounced at the same place it bounced before, so I guess that's good. It put in a higher low for about eyeball 10 days. However, it's still knocking on that. So I need it to break this level right here before I can say, okay, the breakout is confirmed, because it's been here recently. So how does it handle this level? So if it does break this out, maybe it regains some momentum upwards. So again, fundamentally, I don't know what's going on there. They have earnings coming out soon. Last year they came early May, so maybe they do it the same way around the 5th, 4th, 6th. Check your local listings for that. That's Oxy. Caterpillar, that was mine, not requested by anybody. It used to be a, you know, if the globe is growing, Caterpillar is growing. Why isn't it moving up on China bullish news? That concerns me. Lower highs, a lot of lines. I used to trade it actively and not recently. But the good thing is it's putting in higher lows. I guess I can stop the continuation there. Higher lows is good, but squeezing. So now move is coming. I mean, how much lower can it go? Hey, guess what? It can go lower. Let me zoom out. This is an important box. Yeah, well consolidated. Lose that box, and then you have to go further out to check out the problems. Yikes. There is a lot lower it can go. Okay? That's why you got to look at different time slices. Don't focus on what you see on your screen. Zoom out. Step out of the box. Again, I'm not calling for these levels. It's a possible scenario. So don't focus in on one. Okay, talk about market confusion. BIIB, Biogen. That was a Friday. Everybody, buy. Kramer, like, you got to buy it. You cannot not buy it. It goes to an all-time high. You got to buy it. And then it goes to another all-time high. You got to buy it. Everybody convinced buy the biotechs right there. Really? Okay, I wrote it up recently several times for you, and I know I mentioned this channel because I've drawn it. And here we are. Look at that, straight down. In fact, we took puts for it. Yeah, I closed the puts too early, but hey, guess what? I made money. I'm not going to cry over it. Now we're below the 420. Where shall it go? I have no idea. I have no interest in trading that. This is just well beyond my pay grade. And there's an open gap here, and there's an open gap here. I'm not saying it's coming down to 300, but markets crash, it'll come down to 300 in a jiffy. IBB, that represents the whole shebang of all of the biotech. Sweet, you know, red candle, almost down 1%, but it was a lot worse, down 1.7% at least at one time that I looked at. That was that same Friday. You have to buy the IBB. But crazy. You're missing out on a lot of money. Guess what? If you chase them out there, you lost a lot of money. So, yes, great. They bounced twice here. They're holding this level, but well, guess what? This level used to be resistance, so it better hold support. If they break it, just like the other chart, they may want to come down in between those two lines. So this one first and this one second. This isn't a market correction. I'm not saying that's where it's going, but that's a possible scenario. Apple, somebody was saying they wanted to go May 120, 115 credit put spread, meaning they want to be bullish in that channel that I've had. I don't like it. First of all, it's May, way too much time. Second of all, it will include earnings. I never ever take credit put spreads into earnings in size. And also it's just too close for comfort, and it pays $1.70. So the fact that it pays $1.70 out of 5, because the maximum loss is $5, and they're giving you $1.70 for taking the risk right now because they know you have a good chance of losing. A realistic low risk trade would pay 50 cents on a $5. That gives me a great reward as far as yield, and it probably gives me a theoretical chance of success in the 90% versus this one, which is in this maybe 60, which sounds high. But remember, 50% is a coin flip. So for me, this 50% is the zero. So 60 is not a good chance of success. It's gambling. Go to Vegas, have a couple of cocktails, put it all on red, about the same odds. Okay, so I don't like it, mainly for the earnings. And an event coming, the watch release. I think they're going to sell out of the watches. So I think buying Apple calls could be good on the crazy idea that people will buy it to the 132 level again because they sold out of watches in 10 seconds. And it is a possibility that they sell out of watches in 10 seconds. That's Apple. FDX, also another one that we talked about today, and I think I wrote it up, so beat it to death on that one. We'll skip it. Netflix, a wounded duck, down, almost 1%, I think, at the worst time of the day. But what's wrong with Netflix? This is my box. It needs to hold this box. It's not scientifically proven exactly the levels, but here's the theory. It's so close, and it's bouncing off of this line. If it loses this line, which is, what is that, 405, I'm eyeballing, 406. If it loses this line, this comes pretty fast. This is head and shoulder-ish in theory, in spirit, and there'll be talks of, oh, it got to close the gap, fill the gap. People love that. That's a big gap. So 350 can be in the cards, or 360 at least, okay? So I'd be careful chasing it. If market's correct, you can rest assured this one will be running downwards. Similarly, how about that? I said it without stuttering. Amazon, very similar situation. Needs to hold 365. If it loses 365, these are too fast of a candle. So down to here and down to here pretty quickly. All right, so we mentioned BIB. Oh, joke of the day, Tesla. You will not believe it. Literally joke of the day. Actually, you can't see it here. I'll show you here. Watch this, DSLA. Right here, this was a response. Algos, they call them algos, the people, machines that trade, was a response to a joke that introduces Model W or something like that. No joke. Look at that. Huge volume. Look at the volume. That's huge. Look at the volume next to it. This is 1 minute tick, right? Volume, barely moving, barely moving. Bam! Barely moving, barely moving. So even pros get fooled. This was an April Fool joke. Somebody should go to jail based on that, in my opinion. But anyway, because it'll cost somebody money. If somebody has automatic triggers there, boom, their order gets executed because of the joke. And guess what? It's not that funny. All right, last minute request was CenturyLink. Somebody sent CTL as a ticker. They said it looks like it bounced and it's ready to run higher. It sure does from here, but a couple cautions, okay? The good thing is that it moved past that. It used it as support. What is that? Oh my gosh, I don't know what that is. But anyway, it lost it right away, but meandered and put in a few months up there. That's pretty good. But then recently slid down. Don't know why. Open gap here. Lower highs, lower highs, lower highs. Luckily, okay, we can draw it. These two candles, this candle is confirmation that it broke that orange line, but now I want to see it break that red line. So I'm not chasing it. I need confirmation. I need 36 in order to believe it. Okay, why? Because this is, if you think about it, that's one shoulder, that's one head, and that's one shoulder. Yeah, sloppy, too long, neckline not perfect. Doesn't matter. It's there. I look at it. So I need confirmation. 36. If it closes at 36, that means it's running up. And if markets continue running up, I'd rather miss $1 or 50 cents in this case. I mean, where's the rush? I don't know. It reports earnings soon, so a debit call spread would probably be the best way to play it. That's it for today. I thank you for your attention for 20 minutes. And the recap was about 10 minutes and then about 10 minutes of other stocks. If I'm not covering your stocks, shoot me an email, a request. I have no problems looking into tickers I don't track usually, like this one, and I'll give you my technical opinion on them.